All right, good afternoon, good evening, everyone. Today is Monday, September 23rd, 2024. Our goal here is to review the market generated information in a holistic fashion. We are intimately following the auctions narrative of both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did speculate in the market today. Please see our uploaded recording. Contains my real-time analysis. I use these as archives as a tool for my professional development. All right, cool. Let's get started. So we'll start with our general questions. Where is the market coming from? What's the narrative of the price and expectations? And what is price trying to accomplish today? So again, last week was the highly anticipated FOMC. So as of right now, any data that we receive is going to be a little delayed, or excuse me, it's going to be a little bit outdated. It doesn't paint the whole story of what's going on. So we'll actually look at the calendar today. We did have the PMIs, which wasn't, again, too anticipated given that the rate cuts just happened last week. We're a bit lighter for Monday, Tuesday, and Wednesday this week as a whole. And then it picks up a little bit on Thursday and then Friday with PCE. Of course, we do have a lot of Fed speakers this week, so it's something just to be cognizant of. So ideally, the market is just in a situation where we're just going to auction and we're just on a wait and see. With the economic data, we're a bit unsure. So we may see some of that uncertainty within the price action itself. So looking at the actual price and candles themselves, looking at the daily candle, we are still near that 2 week balance range. I know you may be getting a little tired of me talking about it, but really not too much has changed. We just kind of broke above, and we're going to see if we possibly pull back to the same range and continue, or if we just do a shallow pullback and just continue upwards. But as of right now, we are seeing just balance within the RTH sessions. So I don't have it on the RTH only. The majority of this candle was overnight. Again, you can look at the Thursday's homework. So really, the buyers who are in control on the highest time frame and the intermediate, even the dailies, they have control. So really, their goal was to ideally break above the Friday's high and continue one time framing with higher lows and higher highs, ideally. So good job with there. It's no longer another inside bar, but we're still within the same inside bar from Thursday. For the sellers, we really don't have much respect for them for right now until they can really break under this low, which is going to be below the 5700s. And we know that that's a very big area on the market profile. Big volume node, big high volume should be the volume point of control for our composite that goes back to, I believe we had this until this August. I mean, April. Yeah, the end of April. So again, sellers have a lot of work cut out for them. The 5700s are going to be a tough nut to crack. 5700s are about up in here. We'll look at it on a 138-minute candle, but again, we won't get ahead of ourselves. Ideally, the bulls wanted to um, explore higher, but not give up any ground to the downside. For the sellers on the NQ, sellers really wanted to keep price below the 300s so they can the sellers can continue control with this down sloping action with the lower highs and the lower lows. But we do have our higher high come in here. So it's a bit weird because again their 2 week balance range is a little different than ES. But you know, it's this one's a little difficult, but again, we won't get ahead of ourselves. The goal for the sellers was to keep price sustained, and the buyers really want to kind of push above. So sort of a stalemate on the NQ. Looking at the actual footprint for the daily, again, it was a very short range. You can see this is a normal shape profile, very much of a bell-shaped curve, with the majority of action taking place in the middle as well as the delta. Sellers ended up being 15 negative, which is about their minimum for the day. Buyers had control; they got it up to about 3K earlier in the day, but they ended up liquidating and just finishing a little lower. Majority of the volume was done in the middle. So ended up with about 200 points of range for the NQ, and then about 40 for the S&P 500. Same case here, except it was a bit neutral, lighter volume on both sides. We're just at about a million and about 400,000 for the NQ. So again, not really too much has changed from that standpoint. We don't have much for earnings until Micron on Wednesday after hours, and then Costco's for after hours on Thursdays. We've already looked at the we've already looked at the data. PMIs were today. We'll look at the SOC for that, and then it's going to be a bit light for tomorrow and Wednesday. The actual sector tracker. The quadruple witching was last week, so there was some rebalancing. So I think some of that may be due to the sluggishness that we're seeing here. So the weightings are going to be a little more balanced as of right now, given the way that everyone has grown. So things should be a bit more balanced for right now. So tech we see about unchanged for the most part, and really consumer staples, excuse me, consumer discretionary and utilities led the way for today, followed by industrials for more of the heavy hitters. Really not too much of a weighting on the energy side. Same thing with the communications, not really too much progress there. The majority of this was going to be discretionary, utilities, industrials, and then a little bit of the staples here. Not too bad from technology and financials and healthcare. Again, these are more of the top three, the heavy hitters. So they didn't do bad. They didn't make things worse. They just really didn't contribute too much, which is why this is balanced, which makes sense. All right, cool. So we'll look at the market profile to go a little more granular. Again, we just talked about the 5700s all the way down to the 5600s. We had this big gap here. So really the buyers want to protect this 5700 zone and try not to get below. Anything above this 5700 is going to be ideal. They really want to protect this FOMC zone, which is between the 5760s essentially and the I believe the 80 the high 80s. I think it's like 5686 I believe. Um, I just changed the color just so it's a little easier to view. But I digress. P-shape profile for the day. Again, you want to take this with a grain of salt. The P-shape comes from the overnight session where no one really wanted to trade lower, and then you had the rise above, and really the RTH just really held it down all day and didn't get priced lower from that sell off with the overnight session. So a solid day for the buyers overall, but we'll look with a little more context shortly for the intraday. But yeah, no singles, nothing like that. We're just trading near all-time highs with they really want to hold the 57 40s and the 30s ideally, so they don't have to test the 5700 zone there. And they were going to have the same situation for the NQ to a degree. They still want to protect their areas, which is their 900s to their 700s. They don't want to get to the 700s, so ideally protect the 900s, which is exactly what they're doing. But their high volume node shelf is going to be above them. So something that they definitely want to be on the lookout for. So they're stuck between these 20K 200s and then the 19,000 200s. So about 1,000 points of range that they're kind of stuck all in here. So ideally, they want to protect the 900s, and they're good. Anything above is just fair game for the buyers. Sellers really want to keep them below the 200 mark, which is what they've been doing so far. This is the monthly composite for the ES and the NQ. Again, they're not able to get above the 20K 200s for the NQ, and then for the ES, they're just a little stuck towards this top quarter here above the value area high zone for the composite and for the month of September. So they're really just staying above the 57 half mark, 5750s, if you will. All right. So again, we just had much of a compression day, so really not too much to look at regarding the footprint. We literally just head sideways for the most part. We're not going to look too much into this because all the volume is going to be a bit lower overall. Really Not much significance, no significant test either. No retest of the FOMC for either bits. Excuse me, for either assets. So I mean, yeah, I mean, really nothing changed. It was just a little bit of a compression here. So we won't belabor this. That was the NQ, and we're looking at the S&P 500 here. Same situation for the moment. Battling with this FOMC zone. They were able to test into it. I think this was Friday though, right? Nope. No, take it back. Yeah, this was Monday. Yeah, they ended up leaking into it again. So this is something that I've been, kind of paying attention to since we did break above. We've retested this FOMC zone once. We'll call this twice and three times over the span of Thursday, Friday, and Saturday. So just showing a little bit of indecision on whether we really want to trade above here or if we're gonna possibly a hint that we kind of go back in the middle of this range and see if we can find a little more activity to the buy side, because it just seems anytime we get past these 80s, there's just a lot of pressure or a lack of willing to buy for new money longs above this level to push us through. But again, it's only been Thursday, which we kind of poked above, but no real attempts on Friday or today on Monday. And then we'll look at the 3 minutes, so just a little more of a structure. So for the S&P 500, we just had like a little small gap up, just opening at the top part of the prior day's range, which was Friday. This was really crappy to look at in real time. It's important to, let me not say crappy, but this was incredibly confusing in real time. Um, just seeing the biggest drop, or excuse me, just the engulfing, this big bear candle here to start the session, and then we really just chopped sideways for the majority of the time, but very much of a like slanting up kind of channeling, but no real pokes above. Anytime we looked above the new highs, we sold off here. We looked above, we sold off here. We looked above, we sold off here. We tried to go back through the overnight high, we sold off. We tried to go back above this overnight high, and then we sold off again. But there was no continuation to the downside as well. As soon as we looked above, we immediately came back up. So I mean, this is just a clear balance day. Again, it's really not too much to talk about here. There was opportunities for you to trade this, but you would be mindful of not too much continuation as you're above the prior day's range, trying to play back to the downside when it's a little better to play this midpoint and ideally try to buy a pullback there and see if you have some continuation. But it was just no excursion to the upside or to the downside. We were just really just stuck in this range here, which gives us that kind of P-shaped profile that we were looking at on the market profile. And again, any action down here, which was the overnight low, there was no kind of tests with this at all, which was interesting to see. So strong showing from the buyers to be able to keep price above this IB low and close near this open. Looking at the actual like full session, this is indeed that drop that we were looking at. We kind of drifted up, got near the 82s, catapulted down all the way down to the 44s, did not break this pivot, and then found our way back into the middle of that range for more balance, which is what we've been seeing, and then more balance to the day, to end the day, that is. So we went up, we went down, we went up, we went sideways. Again, not too much to really say here, but we're still above the prior day's high, and looks like they're trying to aim near the Thursday's um, initial balance high. All right, and then looking at the NQ, same situation here. Opening up in range, barely above. If now they open up in range. So yeah, same situation. Channeling up, looked above, it fell. It look above, it fell. Couldn't trade much below the IB low, and then we just closed at the open. So literal doji balance day. Again, not too much to talk about there for the RTH session. And then the same situation here, looking at the overnight where we shot above the prior day's high, and then we shot back down lower, and then we just kind of bull flag to end the day neutral which is just sideways. So just more of a continuation of where we were from Friday. Whether you would consider that bullish or not, I'm not sure. As far as the possible plays of the day or the plays that made the most sense to me, looking at this full-time chart on the 3 minute, I was doing more shorting, trying to do, I was trying to do more of a breakouts from here, but this was from the big impulse that we had a little later, a little earlier in the session, and there was just no kind of continuation here. Try doing breakouts to this here, targeting the overnight high, and again, there was just no continuation. So in real time, again, I think it's really important that you review these DOM sessions so you can see what it looks like when we're choppy, when we're kind of like channeling higher with no continuation. That's important to see. It's not just choppy and you just kind of sit on your hands. You can make money from that for sure. And I'm talking to myself in this situation. You can make money in this. You just have to be patient. You have to have a plan. But if we're going to completely disregard all this chop here, we really just want to focus on the overnight high and then the overnight low. Who gets the first test? If we're seeing that we're kind of going up and going down, going up and down, going up and down, going up and down, I would imagine once we find our way to the overnight high, it's a possibility for us to go down, all right? Correct. So we ended up taking a short here as well and ended up targeting this opening. Made a little more sense for us to target the mid. And then anytime we went right back to the overnight high, which was very short from each other, about 30 minutes and then another hour. So I mean, you have multiple attempts to short this overnight high and at least play to the open, if not the IB mid, since this was clearly a two-sided tape day. As we were short, seeing this in real time kind of threw us off. This a bit of a reversal from the lows. This is also part of our playbook here as well. This other outside in trade, this look below, and this scurry back into the initial balance, and then really this reclaim of this 5S for this candle here. We come back up, we get it rejected. We test below out of the 5 smoothing average, but cannot hit this initial balance low. So really at this point, I don't see a reason why we don't get long here with this specific candle. This is at the 66.25. You can call it 50 if you want to mark it in, and using the initial balance low as your stop, maybe one tick below. So that'll get you at 3.25 points. If you did not want to, and again, I'm talking to myself, if you did not want to enter on the actual pullback, we want to enter on close, you can have a 3 point risk, at least targeting like that opening for the same overnight to open or overnight to mid, overnight to open or the overnight to mid. You can do the same thing from the initial balance to the mid or the initial balance to the open. Same situation there. So again, just make sure that we're paying attention to these ranges and just really get in, have some confidence, have your stop, and it is what it is. If you want to have a little more protection, you can have your entry at the 66 half, and then the low was a 61, 61 even. So I mean, even that in itself is about 5.5 points. Call it 6 points. You can then easily target at least 12 points. I mean, if you're just kind of looking at it that way, you would have got the 12 points there for your 2 to 1, but really you would want to target this open, which made sense for you to get back into this range, which is near the volume point of control, I believe, for the day anyway. So this just made good sense to play around these ranges, really targeting the open and the mid in this situation. So again, trades was from the overnight highs, given a two-weighted tape and the extended ranges that we've already had, and low volume. That made sense. And then looking on the NQ, same situation, but notice they could not get back to their overnight high or their overnight low. They were just like really stuck in the middle. So we didn't have much action on the NQ. We had like one error. We tried to do a breakout here, and there was no follow through, so we ended up liquidating. So I mean, no real trades here for the NQ. We had no real point of references. We were all just stuck within the overnight range. So this was just kind of hands off for us personally. So yeah, I think that wraps it. I think that about wraps it up. But again, solid day for the buyers overall for them to keep prices higher. But good shit on the sellers as well for them to be able to not give up any territory and really reject these all-time highs if possible and keep price below these 80s. So interesting time. Bulls still have control. The overnight sessions are going to be important with the overnight selling that we saw last night and the reversal back upwards to end in a bull flag. I think we want to give the Bulls extra credit because it may not be all big and flashy, but they're getting work done and they're maintaining their territory. So, I mean, really good job there. Again, we have a bit of a light data until Thursday and Friday. So, this is just going to be some period price action that we're going to see. And we really just need to trade what we see, not what we think. And we'll leave it there. All right. Have a good night.